What's up guys, it's Flash. In this video I'm going to be talking about the stock market, the pandemic and what stocks to watch out for, so stay tuned. As you know guys, the stock market is doing crazy things. It's so hard to predict, but there is certain stocks out there that we're going to be breaking down live in this video. Before we get into it, please hit like and subscribe guys, it helps me out so much. What's up guys, I had to interrupt the video and I do apologise. I just wanted to let you guys in on a little secret. The Flash Forward day trading course is out now. If you're interested to learn how to trade stocks the correct way, check the link out below guys. God bless. So guys, this is one of the stocks I'm watching. It's Zoom. I'm sure over this time everybody has heard about it and what it's kind of doing. I mean, the numbers of Zoom in terms of subscriptions and signing up has just gone through the roof. Although it's a free service, I mean, you're looking at advertisers coming in. It's just the number one probably communicating tool on the internet right now in terms of video calls. So it's such a big part of everyone's life now, being on this lockdown. So that's why I'm going to be talking about it and being covering it. I mean, it is going to be a huge part going into people's kind of jobs. You know, you have to look at the aspect of, you know, is a lot of people going to be working from home now? Is this going to be a tool for communicating? You know, is there such thing as going into the office anymore? So these are all kind of factors that we have to look at. But some of the levels on Zoom I'm going to be breaking down for you. But as well, the question remains that, is Zoom going to take a big drop when the world gets back to normal and we no longer need video calls? I'm not saying it's going to go into dust, because it's certainly not. But maybe it's not going to be as popular, so the stock will fall. So we have to be looking at it in both ways, both up and down. So some of the angles and levels we're looking for it. So let's answer the question, get straight into it. Is it a buy right here? No, it's just too overextended on the daily. It's the daily chart we're looking at. It's too overextended on the daily from our 9 EMA. It does look like we're going to be starting to come down into a flag pattern. Now, it's really early to say that, but that's what I predict is going to happen. It's going to come down, meet the EMA around 200. And it might flag out there, and if that's the case, it consolidates and breaks a flag. We're looking at another run to push a new high. If it flags and it doesn't hold 200, well, the levels to watch for then for a potential buy is around the $160 to $180 area. I say 160 because it's previous resistance become new support, as we can see, and the same with the 180 area. Previous resistance can become a new support, and by the time it's kind of in this area, the EMAs will have caught up with it, so it's a potential buy there. It's not a buy right now at 213, 215 or even 220, because it's literally in the flash forward course we cover this is in the middle of no man's land. We have nowhere to target and no support, so we're buying in the middle of no man's land. It's very dangerous. We need to have a plan set out. So one of the plans, like I said, if we're flagging at the 200 and holding, a potential buy for an entry. But overall, I would like it to pull back a bit more, consolidate. I'd be looking for a long-term investment from in the $160 to $180 mark. And Zoom is an interesting stock. A lot of the stocks we're going to be covering will be quite similar. So let's kind of jump into the next one. So the next one commonly is Netflix. Again, similar aspect. During this pandemic, we can see the kind of the big run it had. You know, everybody at home, the subscriptions. One of the months I think was an extra 15 million subscriptions, which is hard to believe because you would assume everyone's on Netflix, as it is. But the subscriptions boomed, causing this into a huge run. Now what's happening here is we're going into a consolidation. This area of $430 I have marked off here is looking like a rejection. It needs to break above that 430 resistance to confirm the uptrend. But right now it's in a sort of consolidation. It will potentially fall back down. I'll be breaking over some of the lines and the levels we need to be looking out for. But if it's held under 430, we might see a downfall or a sideways move. Some of the areas that I like on this particular stock, I'm breaking through it with you, is about the $400 mark is nice. You can clearly see why. Again, previous resistance become new support. These are really simple basics. We cover all this in the flash forward course, but this is basics 101. You should really be understanding this, and it makes it a lot easier to break down the chart for you. as well, the other kind of lines I'll be looking to buy is around the 350 to 400. 350 all day long, Netflix. You take that all day long. It's a great company for a buy. So 350, I don't think we're going to be going down that low again. But like I said, we should be coming into a recession and we will see that low, but maybe not in the next couple of weeks we won't see it. But 350 is a nice buy. Again, if we did have crazy times, down here is a buy all day long around the 280 290 mark too. But where I'd be liking to get in this is if it comes back, holds the $400 mark, and we might start to curve a little bit. Once we see the curve, I'd be entering here about the $400 mark to hopefully go break through the 430 if all doesn't go well. Again, the 350 area would be looking nice for a nice discounted buy there. What you have to think about Netflix as well is, yes, the subscriptions are going crazy, but if this continues, you'll notice what's happening on Netflix is there's a lot of dubbed, series or films coming out. What that means is the mouth movements, say it could be made in France and they're speaking French, but they dub the voice to match English, so the mouth movements don't match. That's happening a lot, solely because they're running out of projects because they can't film new projects or new series or new films. So there's going to be a lack of that. Now, if that happens and this keeps going, well, obviously movies won't be able to be filmed nor series. That will affect the overall price of Netflix as well. So, it's kind of a 50-50 on it. That's just a really long-term aspect that I'd be bearish on it to say the production would be slowing down and would be paused, which will affect Netflix. But overall, I can't see this going on too much longer. I think they'll be back to production quite soon. America seems to be coming back to normal ahead of the rest of the world. So they're the levels on Netflix, which I'd be watching out for. Again, big company, it's safe. You're investing money into a safe company. I wouldn't invest kind of a large capital or hold large capital into the other momentum stocks I trade, but I do cover all that in the course. But these are some of the stocks that I think have huge value in what's going on today. So again, PayPal. We have to be looking at PayPal. Why is PayPal significant now? Similar to Stripe and all those kind of online companies in terms of banking, they're booming now. People are doing business at home. People are using PayPal, Stripe more than ever. That's why the PayPal stock has hit all new highs. I don't understand, other than that, why the stock market is hitting. Some of the stocks are hitting all-time highs or 52-week highs when we're going into a global depression. It doesn't make sense to me, but I made that in a different video. We're not really going to be talking about it. But the reason why kind of PayPal is huge value right now is, like what I said, it's the amount of people kind of doing online transactions, businesses setting up. So the accounts in PayPal are going through the roof. The sign-ups are going crazy. So the value is there. But some of the lines or some of the areas that I'm looking at in terms of buys and to be careful. Now, what's always dangerous about buying a stock at an all-time high is, first of all, you don't buy here. It's a bad idea because we have a long way to fall. But what's hard about trading stocks like this is because we don't have anything to measure it off. We'd have no other resistance, not unless we go back a few years, which we're kind of losing the authenticity of it the further we go back. But I mean, in about a year here, there's no going back. We know that we can see of highs, so we're kind of going in the dark here a little bit. But let's break down some of the areas. Now we have to be careful. There's a gap here in around the 130 to 140 area. Now what happens over time is gaps will always fill. No matter if it's going up or down, gaps will always fill. They'll always close themselves. It mightn't happen straight away, but this gap will certainly be filled. I can guarantee you that. There's not many guarantees in the stock market, but gap fills are a guarantee. It could be a year away, it could be a week away. We don't know, but that will fill. So if the stock does start to buckle down and it breaks a level of 140, that is an indication of a short if that breaks a level of 140, and your cover would be about 130. We'd look to close that gap. Okay? But in saying that, it would have to break down 140. Now, let's look at it a bit more closer here around the $150 mark. So, if we're looking for the stock to, PayPal to keep going, we needed to hold the 150. It's a significant number. It's all-time high, so we would need that to hold 150. Again, resistance becomes support. So the 150 area is to hold if you're going long. You're giving it a chance to pull back as well from about the 160, 150, looking for some consolidation and some patterns to jump in. Okay, so again, if the 150 breaks down, the next level we're looking to hold or break would be the 140. If 140 breaks, it's a clear short or indication that we're going to fill this gap. So that's would be quite, I'm not going to say an easy trade, but a trade I'll be looking out for. If we hold 140, it could potentially be a good buy as well at 140. You know, your EMA here, 50-day moving average, will certainly start to come up and catch the stock as it's fallen. We'll consolidate a little bit, rounded bottom on it, and bounce off a support and take a run. That's another option. If it doesn't, again, it will snap through. And again, I mean, a solid buy on PayPal is around the 125 area all day long. I like it here at 125. The reason being is it has a big support there at 125. It means a lot for the stock. I'd be looking for the whole level to 125. If it didn't, you could see it fall further. I mean, you'd be looking at levels around the 104 to the 108 area that we'd be covering in there. But again, nice and easy stock to trade is PayPal. It's not, it moves fast, don't get me wrong, but it's not like some of the momentum stocks or like Teslas or stuff that will take your head off with a drop. It does move fast, so there's money to be made. But again, it's one of the, I'm not going to say an easy stock to trade, but one of the easier stocks that I do like trading on a daily basis. But there's some of the key levels that we're looking for. Again, we're going to be jumping into airlines now in the next one. I think you're going to be interested in this. So this is crazy. So we're looking at American Airlines here. I was looking at this stock a few weeks ago at the level of 113. I'm going to show you why. So about the level of 113 here. The reason why I said 113 is because that pattern is a clear pattern of recovery. Okay, we cover this pattern in the stock trading course. Again, you can see why I like it. So you can see a clear resistance at the 113 area. Was always going to be a major factor. Again, we're starting to follow our trend lines up, making a clear recovery of a breakout. So once that 113 broke, it shows levels of movement. We're getting a big ton of volume here that hasn't, you haven't seen it in quite a while. Now, here's the other thing. I don't know why airlines are starting to come up now, and it doesn't really make much sense because there's not a lot of planes in the sky. Airlines right now are a bad investment in my opinion. It's not something I'd be willing to put my money into. Day trading is fine, but in terms of long-term investment, I wouldn't be, banking on airlines to start recovering anytime soon. But it's looking like it's trying to. The only reason why this is happening is, again, I covered in the course, is how patterns work, and why I focus on patterns is because when everybody sees the same pattern, that drives volume into a stock. Now, I don't know. I didn't look. Does American Airlines have news today? Today we're filming. It's Thursday the 4th. So I don't know if it has news. I didn't look into it yet. I'm just kind of recapping over the areas of resistance that I like and support where I'm buying. But when people see the similar pattern, that's what causes stocks to spike as well, especially on flag patterns. So that's why we trade them. So another traders see the same thing. Now, I'm not saying that's why it popped, but that was a clear level of resistance that we were looking for it to break out. Now, where we're looking for it to fail is between the $116 and $118 mark level of resistance that we're looking for, that it's going to probably struggle at and will potentially fail along the $116 or $118 market for you. Okay, so I don't think it's going to keep booming past it. If it is, I'm wrong. I don't think it's going to happen in the next week, and I don't think it's going to happen in the next month, but we'll see how it plays out. Again, all the stocks that we are covering is, you're following them on the S&P, the SPY plus 500. So, you watch when you're trading these big tickers, watch the overall market. They tend to follow it. So that's your kind of good indication on it. Again, it's just stripping it back to the basics. These are some of the stocks that we're looking at. There's some of the lines and indications that might help you what to look out for. I do hope you learned something from the video, whether it's in the stocks or in the value of some of the patterns we are covering and the areas to watch out for. Again, I want to thank you so much for your support, guys. A big thanks as well. I just passed 3,000 subscribers, which is a huge milestone for me. Again, it's not grown like a million miles an hour, but I'm happy with the progress. I'm happy with helping you guys out. I'm happy with the support and love you show, so I appreciate it. If you do like the video and you learned something, please hit like and subscribe. Really appreciate it, guys. Once again, good night and God bless. Making $100,000. Characters I met along the way that stepped in and are a big part of my story. There, so stay tuned.